The broadcast is now starting. All attendees are in listen-only mode.
Okay, everybody, welcome you FMFX traders. Welcome everyone to the weekly webinar. Just like we're doing every Wednesday, talking about the events that are taking place at the same week. And this time we're going to talk about the NFP, the non-farm payroll that is going to take place this coming Friday, just like every first Friday of the month. I just want to do a technical check, you guys, on GoToWebinar. You're more than welcome to write down questions if you have any. Okay, through our, of course, through the chat window. Okay, so I wanted to technically check it for you guys. And you guys on the Facebook Live, okay, welcome. And let's start. Okay, last time, by the way, if you scroll down, we talked about the technical analysis. This time we're going to talk about the event that is going to take place this week, which is the non-farm payroll, okay, the NFP. By the way, if you want to register through the GoToWebinar, you can do it through our homepage, as you can see here, FMFX. Okay, all you have to do is to scroll down, go here to join our webinars. You see on the homepage. Let me show you how you do it. You click on Let's Go. And for here, you see next time. We don't have. We have the event. Earnings season is getting underway. Will be the next webinar that's going to take exactly the same time, 3 p.m. GMT time on next week. All right. Good. So this is how you register through GoToWebinar. Okay. All you have to do. Let me show you again. You go to our homepage at FMFX. You guys from Facebook, okay? If you want to join us through GoToWebinar, you go here. Again, you scroll down. You click on Let's Go, and then all you have to do is just to click on the next webinar or whatever webinar you want to register to. I'm going to be here every Wednesday at 3 p.m. talking about the events that are taking place in the market. Registration, you put in your first name, last name, and your email, and you're good to go. Okay. Any questions so far? By the way, you guys on Facebook, if you have any questions, you can write on the comments. I'll try to answer in between. Of course, I'm going to leave some time for Q&A, questions and answers at the end of the webinar. And if we're good to go, then let's start. Okay. Let's open the PowerPoint and let's start. Okay, so trading the NFP. Okay, the NFP stands for the Non-Farm Payroll, which means it measures the number of new payrolls in the United States of America, which is the strongest economy in the world, as you probably know, from last month till this month. Okay, how many new payrolls, how many new jobs are created in the United States of America? And it's not only this, but at the same time, the job report is not only the NFP. We get more details, more information, which I'm going to show you in about a minute, of what's going on in the U.S. market, in the U.S. economy, I'm sorry. And it reflects, I think it's, it's the second most important event. It's a huge event, second most important event in the United States. Gives us the mirror to what's going on in the United States, and it affects the most important event, which is the interest rate decision that takes place 8 times a year. 8 times a year, the Fed, the Central Bank of America, decides whether to make the interest rate in the United States higher or lower. Last time it was last month on March 15. Interest rate went up from 0.75% to 1%, according to the NFPs. So the NFP, this job report has a lot of influence, as we said. It takes place, okay, this information comes in every first Friday of the month. Okay, which means in 2 days, April 7th will be the first Friday of April. And we basically get all the information about the job report. And if we know how to read it, okay, it creates huge and great opportunities for us to trade and make money. And let's see how we actually read it. So the non-farm payroll will be published, as we said, on Friday, 12:30 GMT time. Okay, set your clock, see since we have customers from all over the world, see what is 12:30 GMT at your time. I'm here from London, so it's 1:30 our time. Just make sure you set your clocks for this event. Now, the NFP is considered the biggest monthly event, okay? The biggest monthly event is going to affect the market strongly, okay? The US dollar, gold, and so on. I'm going to talk about later what assets you can trade on, but just for you to understand it. Now, the job report reflects the conditions of the employment situation in the United States, okay? Very, very important, and the market reaction is expected to be huge, as I said. Now, three main numbers are published, okay? The NFP is just one of them, okay? Number of new jobs created in the previous month, that's the NFP. NFP, as we said, stands for Non-Farm Payroll, which means the Americans are counting, okay, the number of new payroll since last NFP, last month, the beginning of March, till now, till first Friday of April, in 2 days, okay? Today's Wednesday, right? We're Thursday and Friday. The number of new jobs created. And we have two more numbers, okay, which this what will make you, this is the, I think this is the difference between a beginner, between an amateur trader to a professional trader. If you know the two other numbers, which is, if you know how to to read the unemployment rate and the average hourly earnings, okay, it will give you huge advantage as traders. Now, traders need to take into consideration all three numbers. Okay, so on the fundamental level, okay, we're going to know how to read all these three numbers, the number of new jobs, the NFP itself, but combine it with the unemployment rate and the average hourly earnings will gives us the full picture, not only to the Fed, but to you as traders, and will generate great opportunities for us to trade and to make money. Traders need to take into consideration all three numbers as said. Good. Okay. Now, the importance of the average hourly earnings number has gained momentum, and because of two main reasons. Now, this number reflects wage growth, which is important when the economy is close to full employment, as it is right now. But the first reason, as you probably know, on the night between November 8th to November 9th of last year, 2016, Donald Trump was elected to be the president of the United States, and he's the president since January 20th, okay? He said a lot of things along the way, and the U.S. Stock market, I don't know if you know, because of tax cuts and government spending, became much stronger, actually got to the highest point ever. But the main thing, he talked about making, you know, America great again, America to the Americans, and the idea was creating more jobs, okay, which this is the NFP, the non-farm payroll, more payrolls, more people employed, take unemployment down, okay, which means full employment, which is over 95% where it is right now. And the main thing he talked about is the idea that corporations and U.S. citizens, the workers, okay, the workers in the Midwest, in the East Coast, West Coast, are supposedly to make more money, which means their average hourly earnings, okay, supposed to increase much higher than what we had when Obama was the president. This is what Trump says. But we're going to know the exact result of what it says in 2 days, in this coming Friday. So the number reflects wage growth, which is important when the economy close to full employment. Unemployment in the U.S. is low and is expected to stay at 4.7%. Okay, right now the unemployment in the United States is 4.7%, which means more than 95% out of the Americans that can work actually has a job. Okay, which is great. So we're talking about full employment, okay, which is a great thing for the economy in the United States. Since 2008, we didn't have, you know, the market was didn't have we didn't have such great numbers. Okay, all the indices, if you look at the Nasdaq 100 or the S&P 500, if you look at the Dow Jones, which gives us the value of the 30 companies with the highest value in the United States, at the highest point ever, 4.7 unemployment is considered almost full employment. So think about it. If we have full employment, which means almost everybody's working, we want to look at the average hourly earnings, which means, okay, it's not enough that people have jobs, but do they really get salaries? Do they get money? Does the salary gets higher and higher? Do people really make more money than what they used to? Okay, if the growth, okay, if it increases more, it's better for the economy, and the opposite. The number of new jobs is expected to be 176. I wrote it yesterday. I think right now it's 174. Let me show you. You can go on Forex Factory or investing.com, or, you know, it doesn't matter, whatever financial website you like to work with that gives you all the needed information on the calendar. You can look for it, okay, and get all this information that I'm showing you now. I like to work with Forex Factory, but a lot of people like to work with investing.com. It doesn't really matter. Whatever you prefer is good. Okay? So let's talk about the numbers. Here is 2:30. Anyhow, it's 12:30 p.m. GMT time. We have, you see, USD, US dollar, what it affects. Average hourly earnings, okay, expected to be 174K, which means 174,000 new payrolls since last NFP till this NFP. Of course, a number, this is the forecast. Now, if the actual number here on Friday at 12:30 GMT time, okay, PM, yes, is going to be higher than 174, much higher. Okay, of course, it's great for the US dollar, for US bank stocks. I'm going to explain it. It's going to be negative for gold. We're going to talk about it in just a minute, what assets you can trade on. But this is not the only thing. This is what only the beginners look at. If you want to look at the whole picture, you want to look at the other two numbers, which are the average hourly earnings and the unemployment rate. Unemployment rate is supposed to stay at around 4.7%, might be 4.8, 4.9, same, full capacity, okay, full employment. Average hourly earnings is supposed to increase by 0.2%, okay? And now this is, I think, this is the tiebreaker, because if it's gonna stay around 4.7, let me just show you what happened before. Just a second. You see, this is the unemployment rate in the United States, goes down, more people are employed, which is great. Looking at this, you see last time it was 4.8, 4.7, 4.6, all the same, okay? If it's going to be full employment, and the NFP is going to be around this number, 174, 175, 176, 180, 170, we want to look at the tiebreaker, which is the average hourly earnings, which means really how much, I mean, employment, full employment is great, but how much money do people make? The salaries are getting better, okay? Does really what Trump says, do the Americans make more money? Okay, so looking at all these three numbers will generate you the opportunity, if you know how to read it and combine it, of course, with the technical analysis on the chart, will tell you exactly how to take the trade. Great. Okay, let's go back to the PowerPoint. Of course, if you have any questions, you can write me down, just comment on Facebook and go to webinar. You have a chat window, so you can do that. All right. So the number of new jobs expected 174, 175,000 new jobs. Wage growth is expected, as you saw, to be 0.2% more than last NFP. Wage growth has been the tiebreaker in many of last NFPs, and I'm going to show you in the charts. Okay, we're going to look at let's say one or two previous NFPs to see how we analyze the market. The dollar movement could be determined by the same number on the next report, just like what happened before. But three main assets you want to trade on. Maybe you want to write it down. So the first one is the US dollar. Okay, of course, if all these three numbers are going to be supportive, okay, it's going to be great for the US dollar. If average hourly earnings, if the NFP is going to be much higher, it's great for the US dollar. Okay, US economy is getting stronger. Why is that? Think about it. The good NFP, okay, will give the Fed, the Central Bank of America, okay, a great opportunity to increase, to raise interest rates. Okay, just for you to understand the interest rate in generally, at the beginning of the year, when interest rate was 0.75% on December, Janet Yellen said, she's the head of the Fed, she said on a press conference 30 minutes after the interest rate decision, when it went up from 0.5% to 0.75%, that the Fed expects that if the US economy growth is going to stay at the same, same rhythm, it's going to stay the same, if it's going to work the same, okay, so we expect 3 hikes in 2017. Now, one we had already last month on March 15, interest rate went up from 0.75% to 1%, what it is right now, okay? Now, the NFP is the most important event that affects the Fed, on their decision whether to raise interest rate or to leave it the same. So mainly important, okay, very important. Wage growth has been the tiebreaker in many of last NFPs. As we said, the dollar. Okay, so you want to trade on the US dollar, okay? Good NFP numbers, good job report, of course, is good. It will make the Fed will give them a reason to raise interest rate. Interest rate is higher, okay? It means it's more people will invest in the United States. US dollar goes up. US bank stocks, of course, if interest rate is higher, okay, so the banks in the United States are making more money because these guys are giving out loans, mortgage, and so on. So if interest rate is higher, they make more profits. So you can trade on US stocks as well, and on gold, all metal commodities such as gold and silver, but I would say especially gold, and let me try to explain why. Gold is kind of like, we said it on last webinar, so I'm going to repeat it again. It's kind of the parking lot of all currencies. When we don't know what to trade on, okay, especially when the US dollar goes down, gold goes up and the opposite. Okay, if you want to see it, you can open the MetaTrader. Let me show you. Let's see some charts here, huh? Okay, this is the MetaTrader. Let's take a look on, let's do show all and go to the currencies. Let's take the US dollar versus whatever, Japanese yen. Look at this. Let's put it on a daily chart. You see, in the last, since the elections, which is here, the elections, okay, the dollar got stronger. Okay, what happened to the gold? XAU stands for gold, got weaker at the same time. Okay, so see opposite correlation. If you wanted to see a proof, you just saw it. Okay, great. So we have all these three numbers, and back to the PowerPoint. Sorry, there you go. A good NFP on Friday could confirm more rate hikes by the Federal Reserve. Okay, as we said, okay, a good NFP is supportive to raise interest rates. The Fed said it will hike rates if the job report is solid. So, as we said, no news is good news, meaning any number around expectations could be good enough for the Fed. Okay, if the average hourly earnings is going to be around 0.2% as expected. If the NFP, the new payrolls, okay, is going to be around 175,000 new jobs as expected. If unemployment rate is going to stay around 4.7% as expected, so it's good. No news is good news, and it's good for the US dollar, it's good for US bank stocks, and of course it's good for the American economy. By the way, the next rate decision will take place on May 3rd, so you can write it down. So this is actually the last NFP before, I think it's the last NFP before the next interest rate decision, and this is why it's so important and such a huge event. Of course, good luck. Let me just show you what happened. By the way, any questions before we go on? Okay, let's go on. Let's see what happened last time interest rate went up. Or I'm sorry, not when on the last NFP. Let's take one NFP for example. Okay, let's choose. Let's go back. Let's go to January. Just, you know, doesn't matter. January. January 6th. It was the first Friday of January, and we supposed to have a NFP there job report. Let's see if I'm right or am I dreaming. Let's just give it a second. Okay. January 6th. Now let me show you. January 6th, you see? Let's see. NFP, supposedly 175,000 new payrolls. The actual number was 156, lower, right? See, painted in red as well. Okay, so all the beginners, all the amateurs, what they did, they went against the US dollar. Unemployment stayed the same, 4.7% as expected, but average hourly earnings, the tiebreaker, okay, was 0.4% and the forecast was 0.3%. So even though we had less payrolls, people were making more money on full employment. Okay, let's see the market reaction. Let me show you. Let's go to January 6th. Let's put it on 30 minutes. Sorry. Okay. Let's go to 1 hour chart. It'll be, I think, easier. Okay. January 10th, 9th, 6th, and this is the NFP. You see, at the beginning, the dollar got stronger. See, this is a half an hour, 1 hour chart, which means that each candle that you see here represents 1 hour. Of course, red candles mean that the dollar got weaker, green candles that it got stronger versus, in this case, the Japanese yen, which I like to trade on the US dollar versus the Japanese yen because here the US dollar is the major currency. And then if we see green candles, it means that it goes up and the opposite, so you won't get confused. And on the other hand, and I mean, the Japanese yen is a pretty quiet currency, so it affects great. So you see at the beginning, the first few minutes because of the bad NFP, 156,000 new jobs, and the expected was 170 something, right? So the dollar got stronger, but because, okay, it got, I'm sorry, at the beginning it got weaker, but because of the average hourly earnings, it was kind of mixed, you see, but average hourly earnings was better than expected, and then the US dollar went up. So this was the reaction. Actually, if you want to combine it with a technical analysis, you see it went down all the way to the support line here, okay, and then started to go up as part of the uptrend of the US dollar. Okay, any question, guys? Okay, I hope I was clear. If you have any questions, you're more than welcome to email me. Okay, I'm trying to answer all your emails during the week. Of course, you're more than welcome to join us on the next webinar through GoToWebinar on our homepage at FMFX. I would like to thank you very much for participating and wish you a great morning, evening, wherever you're from. And see you in next webinars. All right? Thank you. Bye-bye. Video is